And the main bellwether I was referring to for the US economy is FedEx. So if you haven't been following this, FedEx comes out and gives a dire warning about the rest of 2025. Their shares absolutely crashed. But let's go over to a CNBC article and check this out. This was from yesterday, I believe. And today we have this FedEx downgraded at Loop Capital, which calls it a really bad recession stock. So for those of you who get on me and say, oh, George, doom and gloom and blah, 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 blah. Dude, don't shoot the messenger here. If you want to take it up with Loop Capital. I'm just reporting what I'm seeing. I'm just reporting the inverted curve. I'm just reporting the SOM rule. I'm just reporting all these things that are factual. You can't say that I'm giving you data points that don't exist, right? I'm just trying to be objective here, and we've got a lot of negative data coming out. So there's some good data as well. I did a video on that the other day, but we've got to take the good with the bad. And the thing is, I say this on the videos all the time, you're going to get all the good stuff from the mainstream media. Well, maybe not now that Trump's in office, but usually you're going to get a much rosier view from the mainstream media. They're not going to point out the cracks in the dam. So if you just listen to the mainstream media, you're going to think everything is fine. You're going to be whistling by the graveyard potentially. So what I try to do is I try to point, hey, there's a crack there. There's a crack here. There's a crack here. And you need to understand the monetary system to see these other cracks down here. And then if you still come to an analysis or conclusion that the probabilities are high that the United States is going to avoid a recession or we have a no landing, soft landing, then that's fine. That's fine. Everyone's entitled to their opinion. But as long as you're considering the cracks in the dam, you see, most people never consider that. The only thing they consider is that the dam hasn't broken yet. Okay, well, the fact the dam hasn't broken yet doesn't necessarily give us all the inputs we need to do a thorough analysis. Probably preaching to the choir. But this isn't the only story on FedEx. Let's look at this. FedEx cuts full year results forecast on uncertainty in economy and bad weather. Bad weather. Come on now. Can we please get over this bad weather? I can't believe they didn't blame it on the fires in California. The stuff they blame it on is just classic. FedEx lowered its full year profit and revenue forecast on Thursday as the parcel delivery firm battles stubbornly soft demand and uncertainty in the U.S. industrial economy as, okay, let's blame it on Trump. Now, does this uncertainty have a lot to do with Trump? Yes, for sure. But we can't blame all of the economic softness just solely on uncertainty. By the way, how long have we known that Donald Trump was going to be in office? If my memory serves me well, we've known this since November of 2024. And back then, what was Donald Trump saying about tariffs? Was he saying that they're a bad idea? Was he saying that there's no way in hell that he's going to implement them? Of course not. He was saying the opposite. All he's doing now is just basically what he said he was going to do during the campaign trail. This shouldn't come as a surprise. In fact, he's probably doing less of what he said he was going to do on the campaign trail. So this should come as no surprise to anybody. No surprise. So the fact that we're blaming, or they are blaming everything on the uncertainty of the tariffs. I mean, we've known this for 6 months, for heaven's sakes, that this was going to likely play out. And then we've known since November that Trump got elected, was going to be in the White House, and this is likely what we were going to see. Now, did we know the haphazard approach that he's taking? No, but it's Donald Trump, for heaven's sakes. I mean, what do you think he's going to do, right? You think he's going to lay out some 100-year plan and stick to it? No, he's going to be a bull in a china shop. We all know that. So they say, FedEx, our revised earnings outlook reflects continued weakness and uncertainty. Gosh, how much do they use uncertainty? They need to look at a damn some other word other than, I'm trying to think of what a better word would be than uncertainty, which is constraining demand for our business-to-business services. Now, be clear, there is there are a lot of businesses out there for sure that are just not doing anything because they don't know what the input costs are going to be next week or the week after. But you can't blame all of the economic weakness we're seeing solely on that. You've got to look out there and say, okay, there's this and there's multiple other things. So FedEx shares fell 5.3%. Both companies have been slashing costs as less lucrative e-commerce delivery demand from companies like Temu and Shein outperform. Okay. The industrial sector includes, okay, we got that. FedEx lowered their full year forecast. Okay, we got that. The CEO says navigating a very challenging operating, or the company was navigating a very challenging operating environment, including a compressed peak season and severe weather events. Just whenever they say weather, just kind of omit that. Another thing, how does that impact your forecast? Like, are you forecasting that we're going to have negative weather events? And I get it. They're using that as an excuse as to why they sucked last quarter. And then moving forward, but I guess my point is it's always going to be something. Moving forward, you're going to blame it on something else. It's weird that these companies, although they'll mention weak demand and they'll mention the consumer tapping out, all the things that we talk about on this channel, but they always try to tap dance around it and come up with some other harebrained excuse. Okay, so let's move on because unfortunately, FedEx is not the only company that's been saying this. I mean, we've been talking about Walmart, we've been talking about Starbucks, we've been talking about, so many of these giant mega corporations. But let's look at Accenture, which of course they have to be blaming on Doge, and it's not just Accenture, it's Nike as well, which is probably more consumer driven. And what's hilarious is they're blaming the Nike stuff on Doge. It's like, yeah, how many people that were laid off? I guess Nike was the official shoe of USAID. I didn't know that. I'm joking. So Accenture is Doge's first corporate casualty as shares dive on warning that contracts will be cut. And I like the angle CNBC takes here. They're talking about making the government more efficient and not needing all these high-priced consultancy firms. But they're framing it as though that's a bad thing because any government spending is obviously going to be beneficial for the general public, and therefore any cuts to spending is going to have a negative impact. It's just such a distorted view of reality. I mean, look, you ask a third grader how efficient government is, and they're going to say not very efficient, right? This is not rocket science, and this is not left or right. Like anyone that's had any experience with DMV can sit there and tell you that the government is wildly inefficient. So why are we so obsessed with trying to spin this as though streamlining or making the government more efficient is a bad thing? It's all political. It's all political. If Joe Biden or Kamala Harris was trying to do this, the CNBC types would be hailing this as the most epic, most amazing political revolution of our time. So shares of Accenture tumbled about 7.3% after the consulting firm said efforts to tighten federal spending are starting to weigh on its revenues. Good. I hope they weigh on your revenues. I mean, this is what we want, for heaven's sakes. This is cronyism. This is corporatism. This is not capitalism. And this is how your tax dollars are being completely wasted. And it's not like they're being wasted, because if they're just flushed down the toilet, that would be one thing. But unfortunately, they're being used that's in a way that's not just a negative, it's a double negative. Because if it was just flushed down the toilet, then it would be a negative. But unfortunately, it's flushed down the toilet and going to an entity that is wasting even more resources and misallocating even more capital. I mean, it's like this exponential effect. As you know, the new administration has a clear goal to run the government more efficiently. Great. Why should we be against that? Accenture CEO Julie Spellman said on an earnings call, during this process, many new procurement actions have been slowed, which is negatively impacting our sales and our revenues. And by the way, if you're a company that really has all your eggs in the government basket, I mean, I have no sympathy for you suffering or going out of business. Look at this. Federal represented approximately 8% of our global revenue and 16% of our America's revenue. 16% is coming from the taxpayer. For Accenture, what could they possibly be providing the government? They're a consulting firm. I mean, look, here's the grift in my view. What's happening is this is just a way to funnel money to politicians. So the politicians will work for Accenture, or the former politicians will work for Accenture as a consulting, and then or maybe one of their entities will, Accenture will pay them, and then that entity will pay the politician. And this is all a ruse. This is a way basically to launder money. It's a way to bribe politicians. It's a way to bribe central planners and authoritarians. And it's how Nancy Pelosi can go from like a $250,000 net worth to $100 million. How did she do that on $250,000 a year in salary? And I'm just making these numbers up just for the example. It's because all of this money is being driven through these big corporations and then funneled through that entity, through that entity, through this entity, through this entity, and somehow winds up in Nancy Pelosi's back pocket. That's why they're hiring, or else you tell me, why would the government need to hire Accenture? I mean, again, if I'm not mistaken, Accenture is a consulting firm for corporations. What are they consulting the government on? How to be more efficient? Well, they've always obviously failed miserably on that. I mean, are you telling me, and I'm asking the government here, are you telling me that you would be even less efficient without Accenture? I mean, I wouldn't want to admit that, because you're already the most inefficient entity in human history. And if I'm Accenture, I'm not proud of that as well. I mean, could you actually use that as a testimonial? I mean, think about that. Accenture saying, hey, we are so good at consulting that we made the federal government as efficient as they are. I mean, I would try to sweep that one under the rug. Now let's go over to Nike, obviously more consumer driven here. Nike expects sales will plunge in current quarters as it faces tariffs, sliding consumer confidence. Oh, I read an article earlier how they were actually blaming this on Doge as well. But this makes more sense. So tariffs, yeah, I get that, because the cost of Nikes will go, I mean, however much Trump puts the import on China or wherever these things, Vietnam, maybe wherever these are made, then that's going to increase the price of those Nikes. It's not like they've got huge margins for these shoes that they have. So you've got the higher price, you've got the incomes not going up at the same level, and therefore you're going to have demand go down. And that's if we had, all else being equal to the economy, if we have sliding consumer confidence, if we have the unemployment rate going up, then that's just going to exacerbate the problem. Nike, here's the key talking points. Nike expects its sales decline in the fiscal fourth quarter, which is set to end May, to be at the low end of the mid-teens range, far worse than analysts expected. The company said its guidance is based on ongoing. And by the way, this is fourth quarter that ends in May. Okay, so yeah, I guess that's kind of lines up with the time frame of the tariffs. The company said its guidance is based on ongoing restructuring efforts, plus tariffs, plus sliding consumer confidence. During the sneaker giant's key holiday quarter, sales declined 9%. Wow. Driven by weakness in China. On a conference call with analyst finance chief Matt Friend, said Nike expects its sales decline. Okay, we talked about that. And yep. And it expects this process to continue into fiscal 2026. We believe that our fourth quarter will reflect the large impact from our actions, and that the headwinds to revenue and gross margin will begin to moderate from here. Well, sure. What are they going to say? We are also navigating through several external factors that create uncertainty in the current operating environment, including geopolitical dynamics, new tariffs. It obviously, uncertainty is their buzzword. It's just like crypto, when that was hot in 2021, and now obviously, but especially in 2021, or their not just crypto, but the ICO, Remember the everything was tokenized, and we've got a new token, we've got a new ICO, or we've got a new coin, we've got a Nike coin that we're coming. Every single one of these, that was the buzzword that you had to have in your earnings call. And then it's the weather, or then it's tariffs, then it's uncertainty. It's always some buzzword that they always use. It's almost like a script that they're given. So he's talking about the competition. It's a bit more aggressive. Okay, we got that. Just really looking for the macro stuff here. See here, they're talking about Donald Trump implementing 20% tariff on China. And then they talk about retail sales in both January and February were weaker than expected. Okay, well, I don't think the tariffs really impacted what was going on in January and February. And if anything, you would assume that would have increased sales because people were trying to front run the tariffs and stock up before the prices go up. Oh, here's something I talk about all the time, guys. Remember I say you rob Peter to pay Paul. And that's why if you look at a basket of goods, it might not go up even if one or certain components of the basket are going up tremendously, because you're just taking discretionary income away from things that you would have purchased to buy the things that you absolutely have to have. So then this is, I really, I talk about this all the time, but it's so important that we understand this, because when we just think about oil going up as an example, or tariffs, we just think, oh my gosh, that has to create inflation, because we're just looking at those goods and we're completely excluding the fact that incomes haven't gone up. And if incomes don't go up, then they're going to have to take that money from somewhere else. And those prices are likely going to go down, or at least they'll have to fire employees, demand goes down, you have economic contraction as a result. Further, when consumers aren't feeling confident in cutting back spending, discretionary products like new clothes and shoes are one of the first things they cut out in favor of necessities. Over the last few years, the overall sneaker and apparel markets have been slow because consumers have cut back on clothes and shoes, but up until recently, strong companies were still performing well, taking market share from weaker competitors. The typical stuff that you see in this cycle. Hey guys, I wanted to take a quick break from the video to share with you a new investment strategy I've been using. Most of you know the cornerstone for my portfolio is physical gold. The problem is you always have a negative carry because you have storage fees. Same thing with silver. But I've actually found a way that you can be paid to own physical gold and silver. And here's the best part. You're not just paid an interest rate in fiat currency, you're paid an interest rate in more precious metals. Now, I know a lot of you are saying, oh, George, this sounds too good to be true. And it's exactly what I thought when I first heard about this. Here's the backstory. I get a lot of businesses that come to me and say, George, we want to sponsor your videos. Usually I turn them down because it's not really a good fit. But I had a company come to me the other day called Monetary Metals. And when they were walking me through what they do in their business model, I thought to myself, this is a complete no-brainer. In fact, it sounded so good, I set up an account myself, and it's been going extremely well. So I said, sure, sponsor a couple videos, because this is a service that I think would be hugely beneficial to my audience. So here's how it works. You can go ahead and set up an account with them and fund it with your existing precious metals, or you can buy directly from them, usually a little less than 1% over spot. And right now, as we speak on the platform, there's opportunities to be paid about 4% interest. So again, this is not in fiat currency. They're paying you in additional precious metals. So if you deposit, let's say 100 ounces of gold with them, at the end of the year, you'll have 104 ounces of gold. So to join the thousands of investors, including yours truly, who are being paid to own physical gold and silver, you can go to monetary-metals.com/gammon. That's monetary-metals.com/gammon.